Hello and welcome to etbfsi.com. My name is Amol Dete and I'm in conversation with Dhiraj Relli, the Managing Director and CEO of HDFC Securities. Dhiraj, welcome on the show.
Thank you, Amal.
I'm glad to have you here and I'm going to learn 3-4 very important things today from you. Specifically, whenever I spoke with any brokerage firms or interacted with any investor in past who's doing intraday or long-term investments, for him banking was a darling stock. He always betted on banking today. But today when look at the banking stocks, there is too much rally, there is too much volatility, and the banks are not doing good. Nobody knows what is going to happen in banking sector going ahead. In this background, in this particular scenario, as a brokerage firm, because you deal with a lot of clients, what is the call that you take specifically on the banking sector today?
So banking sector is at very peculiar situation whereby still nationalized banks enjoy about 70% market share.
Right.
Private sector banks, despite that they have been into operations for last 2.5 decades, have only about 30% market share. But there has been tectonic shift happening in the market share from PSUs to private sector banks.
Right.
And we've seen that in last 5-7 years, the big buzz is all around the NPAs. And most of the banks, both private sector as well as public sector banks, are grappling with the NPA menace.
Okay.
Did we do right thing to recognize the NPAs? I think yes.
Okay.
It was there, it was always there, but we were not recognizing it. So we were just brushing the problem under the carpet and was almost thinking. So that's where, Reserve Bank and government could able to muster the courage and recognize the NPA.
Right.
I think that cycle is over. By and large, we are done with that piece. Maybe, some more accidents will happen. Recently, we've seen one of the accidents in Mumbai-based cooperative bank and so on. So some small accidents may happen. But by and large, we believe that we have recognized that problem at large.
Right.
What is going to change in the sector? One is that the banks of great deposit franchise is something going to get the more market share.
Okay.
That is very, very critical. So that's a big shift. See, asset story is over. It is all about now the deposit story.
Okay.
The franchise where they can raise deposits conveniently and at lower cost. That's what will get higher capacity to lend, and that's where they get the market share.
Right.
Another piece is that there has been a shift in the market in the sense that primarily PSU banks and some of the large private sector banks were focusing only on the corporate asset side. Chunk of their lending would entail lending to the large corporates, some to the MSME and some to SME, and very less to the retail. But in last decade or so, retail has been emerging and it's growing very fast. I am sure you would have heard a lot of festive cheer also. They were wherever there is a consumption, there is an EMI. That's the kind of theme is there, and all the banks, credit card, debit cards, and wallets are coming out with the so many EMIs and other cashback offers and so on, and so they are driving to that extent consumption also. But coming back to my point, I think there has been shift in lending space, and that's where the margins are also higher. And that's where you require a differential skill set and leveraging the technology, analytics, and your customers' information. And that's where the banks who have put the systems in place, who have got the reach, who have got the distribution, are gaining market share. I'll decode the credit growth for you also. Last number we saw for the August was 9.8%.
Right.
I was looking at the credit growth number in detail for last 4-5 years, slice and dice it for the sectors, industries, and trying to get more perspective to it to understand the banking space at large. So what happened that, industrials having a negative credit growth, whereas if you look at the personal loans, and personal loan entails the credit cards and all unsecured category as a category. So as genre, they have been growing at high teens, and services have been growing at high teens. If you dissect it to further credit cards, 25-30% kind of growth in last 4-5 years.
Okay.
Credit growth in March 14 was at 13.6%.
Right.
March 19, 12.3%. This year, hovering around 11% all these months, but only in August we saw that 9.8%, so single digit.
True.
Metals, textiles, these are the areas, these are the sectors, gems and jewelries, where we have hardly seen any growth, single-digit growth, degrowth in these sectors. But if you look at the sectors like infrastructure, NBFCs, and so on, that's where we've seen a lot of growth.
Right.
So that's the shift. And those banks who are able to align their strategies with the changed consumer behavior are the one who are gaining market share and will continue to gain market share.
Absolutely.
Yeah.
But if I go specifically about the credit growth story now, because the credit is very important for every industry to grow, and banks are going through this tepid time. So what is your view specifically on the credit growth? Will this problem continue? Will the slowdown continue? Because banking has its repercussions on all the other sectors.
We cannot be in the denial that there is definite slowdown in the economy.
Right.
I think all stakeholders so far were living in denial, and it will be unfair to say that the economy is in fine fettle.
Okay.
It is not. We've been having consumption related issues. Pretty much, we've seen the consumption slump in last 6 quarters.
True.
Only that we've acknowledged it in the last 2 quarters and start to act more on the same. I think that this got something to do with we had general elections, even government was not spending enough, private capex was always missing. So we were actually grappling with the problems of private capex and so on, and missed that there can be a problem in India for the consumption also.
Right.
We take in India consumption for granted. We believe that in India consumption is a secular story, and if at all there is something we have to deal with, that's investment cycle.
Right.
And I believe that consumption impact has to happen in the banking sector. Banking sector, showcases it reflects the entire economy. So to that extent, yes, there has been a slowdown. But slowdown has to be, again, the banks which are able to change or modify their strategies to understand the change in consumer behavior and are able to identify the segments which are growing within that space, despite the consumption slowdown, could able to still do well, and they are growing at 20% or so. All 3 banks, large private sector banks, have grown at 20% in last quarter in terms of their assets, and if you look at it, the chunk of it has come from the retail.
Right.
So whosoever is able to change, they are able to deal with it.
Right.
Vehicle loans is another story which has been growing only in the low single digit. You have to accept that, and you see if there is a more growth in the credit card, if there is more growth in the infrastructure space or even in the NBFC space, then you will have to lend in these spaces and navigate accordingly.
One more question I will take on banking specifically. There are a lot of reforms have also taken place in banking space in last 1 to 2 years. Specifically, the amalgamation between few PSU banks, and there is a proposal of infusing more capital into these banks. Has it helped the market? Has it helped the brokerage firms to make your view very strong on PSU banks or the overall banking sector?
I think I would say that the consolidation of PSU banks is absolutely a step in right direction. So there is no way we can say that this should not have been done. In fact, I wrote about it long ago in 2014. I wrote an article that India doesn't require so many banks.
Right.
Even capitalization, because you have large NPAs and you recognize the NPAs, and if you have to do further lending, then you have to recapitalize the banks and government being the large shareholder, they have to take the lead in that space and recapitalize the banks. I think these are all steps in right directions. I think IBC is taking its own sweet time to give a resolution, but I am not unduly perturbed with these delays. Eventually it will happen. Right. So which means that they will get the recovery, they will get their share, and to that extent PSU banks will deal with it. And once the consolidation is through, the cost efficiencies will also play out.
Right.
So once they're done with the NPA problem, the synergies and the overlaps would help them to reduce their cost also. It will improve their cost to income ratio, and they still have large customer base. They've realized, they have understood that they have to focus more on retail, they have to focus more on fee-based incomes. So to that extent, I think that has been done. The only thing I would expect more from the government, that if PSU chairman and leadership position can get longer tenure assignments rather than getting a short-term 2-3 years assignment, I think that would be great, because then they can take some long-term decisions.
View.
If you have to invest few hundred crore rupees in technology and the benefit is going to accrue over the period of decade, then who would take that kind of a call if you have a tenure for 3-4 years or less than that?
Absolutely.
Yeah, but they are in sweet spot, at least 2-3 big PSU banks. They are in sweet spot and they will definitely make money for the investors.
What is your view specifically on the NBFC sector and the insurance sector right now? Though there are very less companies in this particular segment which are listed in the stock market. But overall, these are also very important sectors when we speak about the finance.
Yeah, in financials, I think you can look at financials in two ways. The lending oriented financials and the non-lending financials. So I'll complete the lending piece, NBFCs or shadow banks first and then come to the non-lenders. In case of NBFCs, I think why NBFCs were growing at a rapid pace and they were gaining market share. You have to understand that. They were serving the segments of the customers who were not serviced by the banks.
Absolutely.
So that's easy. Up market share was up there to grab. They grabbed it. And since bank was most of the banks were grappling with the lending related issues, they were not sure about taking decisions and not. So lending B2B kind of to NBFCs was an easy thing for them to do. You can continue to lend an NBFC and let them go and do a more B2C lending. So it was B2B, B2C lending, which was happening in the NBFC space. Unfortunately, IL&FS went belly up in the last year, September, and that's where, we've seen the contagion and we've seen defaults by many other corporates like DHFL, Z Group, and even very recently Altico. So I think that's where we've seen some slowdown, some problem, and that's where we are seeing that almost credit squeeze or freeze from NBFCs because they're not getting funds. They had their own issues in terms of asset liability mismatch because they were borrowing short and lending it long. That's where they got stuck when they were approaching the lenders to lend to get more capital. So my belief is that they're here to stay. This kind of tough environment would separate men from the boys, and some of them who would survive, and they will definitely survive and will be able to find their business models right, and they will grow and they will do very well. So there is a definite space for the shadow banks to be in India. There are so much underserviced segment to be serviced, and they are nimble, they're fast, they connect with the customers is better than the connect of some of the banks who are there in those geographies are not there. So that's where I do believe that they have scopes, and they are doing their own product innovation, technology. They are assimilating technology faster. Banks are also doing their bit, but it's a penetration story.
Quite interesting. And what about the insurance sector specifically?
So now coming to the non-lender financials, I think that is even more interesting space. We've seen few listing in the asset management companies. We've seen few life insurance companies got listed in last 2-3 years, and even general insurance companies. Look at the AMCs first. 2009, 30th September, the AUM in the asset management companies was 6.28 lakh crores. Now it is 30th September 2019, it is 24.51 lakh crores.
Wow.
It is fourfold growth for the AUM. And the share of equity has also increased in this. The proportion of equity is also increased. So this business has grown significantly. Number of folios, I was looking at some data, in 2009 was 4.75 crores. Now it is 8.37 crores. So number of folios have not increased that significantly. They've almost doubled, only less than doubled. But the AUMs have grown 4 times. There is one BCG report which says that it's a 100 trillion rupee opportunity. As per that report, this industry will reach 100 trillion rupee in mid-20s, which means from 24 lakh, 25 lakh odd crore current AUM, it will again quadruple in next 5, 6, 7 years. The year can be 1 or 2 year here and there can be there, but it will. So that means there's an opportunity. And now, unlike, I'll explain you one very important difference in the banking and AMCs. Both of them operates on a spread. Banks operate on a NIM, they have their own fee. Asset management companies do not carry any risk on their balance sheets. Whereas in the bank, when you lend, the risk is with the lenders. Here, if you are giving, whether the equities or debt is performing or not performing, that performance or non-performance is passed on to the unit holders.
Right.
You will continue to charge your fee still. So it's a fantastic model. You don't need many resources. You don't need much infrastructure to do this thing. Digitization is really helping them to scale. The distributors, AMCs, intermediaries, everyone is assimilating technology, and it's now available at the fingertips. With the smartphone penetration, it's becoming so easy to buy and redeem the mutual fund units.
Right.
So to that extent, the opportunity is huge in this industry, and they will continue to do well. And there is huge operating leverage. So the profitability will grow, the jaws will open for the asset management companies. It's a fantastic space to be in. Only I think a couple of AMCs are listed as of now, and more will list soon.
Okay.
Coming to the insurance companies, again, the financialization of savings is a big theme which is playing out for the insurance companies also. People were comfortable with investing in physical gold or real estate, and the real estate has been in coma for almost last 7 years. And I don't know when it will pick up. The commercial real estate has picked up a little bit, but
the retail side of it,
the residential piece of it still in doldrums, and 4.5 lakh kind of units are there in the inventory to grab in 7 large cities. And I don't know, till the time there is a significant drop in prices by 25-30%, I don't think so anybody is jumping the bandwagon to get buy more and more properties. And in any case, the consumer behavior is changing significantly. They are more than happy to live in shared economy rather than owning
the flat and
flat
taking the
or a car
responsibility of
or
EMI.
any other thing. So to that extent, I think the financialization of savings will play out. It's an under penetration. Again, the penetration of insurances, both on a life as well as in general life, general insurance side, is still very, very low. So still many people queue in front of the hospital cash counters to pay in cash to get the treatment done.
Right.
I think we have a really long way to go to penetrate in these areas. That's where I believe that the opportunity is immense in these insurance sectors as well.
True. Since it's been 2 years, if I'm not wrong, 2 to 3 years specifically, since many insurance companies got listed in both life and non-life. Did they manage to create the value that perhaps the brokerage firms expected when they were getting listed?
Absolutely. They have given, the life side, they have given more than 100% kind of returns from the IPO listing, and that too in less than 2 years itself. And even in general insurance side, the returns have been phenomenal. So to that extent, I think they have created a huge value. I think there is still huge value to be created in these sectors.
Again, the finance is a very crucial part of it. As a brokerage firms, when you look at the economy, when you look at the credit growth, what do you think are the 2-3 important things that will drive the sector going ahead? Give me your perspective also on the macroeconomy and what the triggers that will boost the economy going ahead.
I am from that camp which believes that the consumption is temporary. The consumption slump is a temporary problem. We have bigger problems to deal with, like investment cycles, and that's where we are not able to make any growth, because we are already operating at only 70% capacity utilization or so. Till the time the demand will decisively exceed the supply, I don't think so private sector would put their money into new projects. And that's where, even lending opportunities will also be limited for both NBFCs and banks and so on. So we have to address that problem. The consumption problem shall get addressed in the next 2 or 3 quarters. There are enough and more measures. There are some green shoots visible in the festive cheer, and we've seen that all the retail, whether it's Trend, Future, they've all posted Chroma and all. They have all posted a 10% kind of growth over the last festival season. So that means we are back to some extent in the consumption piece. What will drive the market? BFSI, if we are able to kickstart the capex cycle. And even unfortunately, in last quarter or so, government has also not been clearing so many projects, and they have also not been putting money into the large projects. I think yesterday there was some announcement by our Prime Minister that we will go for another 100 airports and 14 billion kind of an investment. I think whenever you get more airports, there are more development. I think when government starts putting more money on infrastructure projects, when government is going on a spending spree without even compromising or if they compromise a bit on fiscal deficit also, that's fine with us. From 3.3%, if we can move to 4.2%, that's acceptable.
Correct.
We need to kickstart the capex cycle, and we need to kickstart the investment cycle. That's something very, very important, and that would be a big driver for BFSI and overall economy also. I think the reduction in corporate tax has made many more projects viable.
Right.
See, the moment you have a lower tax, the project's IRR is better and you can start investing more. But the demand has to come, then only the private players would come and start investing. So I believe the ecosystem is ready and it's getting created. And encouragement to the manufacturing companies with 15% or tax to new manufacturing setups, with the trade war still going on between China and US, and large manufacturers are looking at an alternate places to start their manufacturing. India can be a very hot destination. By hook or crook, we have to make it very attractive destination to do that. I think it would require some work on land reforms also, so that we can digitize the land parcels and enforce contracts and so on. That work is still to be done. I think the another important area which would drive the economy is thrust on exports. Something we've missed out in last 4, 5, 7, 10 years is this thrust on exports. I don't think so. You can keep blaming the currency. Currency has depreciated significantly in last decade or so. So that should give enough leg room for exporters to go and get more orders. But somehow we miss this opportunity, and some of the smaller countries like Bangladesh, Vietnam, etc. are gaining opportunities. Again, government is very keen to do that. They have come out with a roadmap to reach $1 trillion exports in next 4 or 5 years. I think it got announced only yesterday. And currently we have exports to the extent of, I think, just about $330 billion. And from there, if we reach to $1 trillion, that would be a big boost to the economy. So thrust on exports, thrust on infrastructure, more spend by government, giving more and more encouragement to make in India. These would be the driving forces for the economy at large, and as well as for the BFSI space. And I'm not discounting the technology piece, because we know that how all pervasive it is, and how the penetration of and assimilation of technology is there. That would really make the market very, very big.
So, there are many, points that you said. Obviously, the capex cycle need to be improved. The government has already announced, and the economy, will grow when all the infrastructure and everything, at least the execution part is in place. How bullish are you specifically on the BFSI sector now? You have already justified your stand down and explained it very well. But at current position, how bullish are you?
I think the non-lending space, we are very bullish on asset management companies. We are very bullish on life and general insurance companies. Of course, you have to pick up the right company in these spaces. Not that everyone will do well, but as sector, we are quite comfortable with this. And also private sector banks, I think they are continue to gain market share from the PSU banks. Despite the consolidation, despite that they are working hard to get over the NPA menace, but private sector will continue to command more market share. So that's one space you can look at it. And NBFCs, I think I won't say they are out of the woods yet, but at some point in time they would find their feet, and they would be there'll be compelling valuations for investors to get into that space. So you can pick up the best of the NBFCs, top 3, top 4, and this is the time to add them to your portfolio.
Right. Quite interesting. Thank you so much, Dhiraj, for sharing that perspective. And thank you so much for talking to etbfsi.com. And thank you so much for watching etbfsi.com. That was Dhiraj Relli from HDFC Securities, who spoke a lot about banking, lending, and non-lending companies. Thank you so much for watching etbfsi.com. Stay tuned, stay connected to etbfsi.com for the special coverage on banking and financial sector from around the globe. Thank you.